Welcome back, everyone. I just took a trade in London session yesterday. I missed a setup. Some of you may have seen it on my Instagram story. What I've missed, and today I decided to trade London. That I'm most likely skipping New York session. Well, I am skipping it now because I actually lost the trade, and I'm basic like I have to be okay with it because the losses are gonna come sooner or later. I was kind of anticipating a loss today. Um, I should have gone in to a position with a lower size. I did not calculate my position correctly. Uh, this was kind of the only mistake. No, it was not the only one. The first mistake was that I was kind of impatient. I had a really good idea to take a trade from. Everything lined up perfectly. The draw on liquidity, so basically the direction I was trading in was correct. Um, it was just a matter of pure execution, like yesterday. Only this time I was anticipating a trade at the right time, and usually in London you get multiple opportunities to take a trade from, and I was if I did not take full size on this trade, I would still be well, my target would actually be hit and I would make profit. But because I went in with 20 contracts instead of only 10, for example, um, it liquidated me at a loss for $300 or 314 because that's how I have my setting set for a daily loss limit. And once I hit that limit, it automatically liquidates all my positions and blocks me out of the account until the next day, which is the next week. So on my day, Monday, we are going to trade again, but everything's fine. Basically, I'm just kind of going over the trade now, and I'll be going over the price action with you also, so that you will see how I was planning this trade, what was my conviction behind this idea. So yeah, let's get right into it. So as you can see, minus 314. So the total profit for this week is $630. It's alright. It could have been a lot higher, of course, if I didn't take this stupid loss again. But I gotta keep it cool because basically it's just a tuition. So yeah, as you can see, I've been locked out, and the idea was so Asia created these three equal lows. London opened and it started to drop and it took out these lows. So after we have taken out this sell side liquidity, it was kind of logical to me that we need to return to some of these 15-minute fair value gaps, and the most obvious draw on liquidity, so basically where the market is going towards, was the 50% or the equilibrium of this downwards range, and this was basically the target. Also, there inside of these two candles, there's actually an order block, 5-minute order block, and as you can see, we tapped it perfectly, started to drop in 10 minutes, almost 15 minutes. The target was then hit, which were these equal lows down here. So yeah, the idea was that we're gonna return back up. So I had my bias set. I did not worry about these lows getting swept first because London does not like to take these major lows right away before moving in the opposite direction. It kind of leaves that for later on, and that's exactly what happened. So after we had kind of a change in the state of delivery. Well, it was here inside of this order block and also inside these candles. There's that. Well, we can put this actually here. No, above here. So yeah, there was a clear sign that we are indeed going back higher. And I zoomed in onto the 15 seconds time frame, and I saw this fair value gap being created, and then this candle swapped the internal lows, and I then executed a position at this level. I did not place a stop loss because I could have and I should have placed it here immediately, but I was kind of anticipating that we are maybe getting another correction lower. I just did not think it was gonna take me out of the position, but that's what happened. And if I just waited a few seconds more, I could have seen this SMT form. Well, there was an SMT, but I was not really looking for it. It just kind of happened. And if I zoomed out back to the 1 minute time frame, I could have noticed that we have a 1 minute fair value gap with this downwards candle, which means that at least one downwards push can be expected, and that's exactly what happened. And that was basically this candle here, and I could have indeed entered at the open of this candle, because I usually wait for a pushback up and then execute a position right at the open. This would have been a good, yeah, so this low would have been a good stop loss placement, and there was also an SMT. So if I just waited out for this opportunity, I would have caught the move. This would have been my first target here, and after this push back up, I would have moved my stop loss to here and then slowly trail it with the price action to reduce the risk. So yeah, this should have been my execution. This was the clear target. There was also another setup then, but I could not take it because I was already blocked from the account. There was another order block with a 1 minute fair value gap. We've taken out this sell side liquidity and all the equal lows. All the equal lows. We've had a change in the state of delivery here, and we could have entered at the 50% or also the 0.62 level, which London price action usually comes back to and respects it. This is the OTE golden pocket. In my opinion, this is the best entry you can get, and yeah, I would have caught a really nice trade again. These are the kind of setups that are basically high probability trades for me. Something that I should stick to. It's just a matter of staying patient for the right execution and not hurry. Yeah, so this was not as good, even though the candle pushed back up. It was not as good because we didn't have a change in the state of delivery yet. I'm going to wait for that to happen first from now on, because I don't want to risk these stupid kind of executions and risk money on these kind of setups. So yeah, I actually got a really good lesson today. Also, this order block got perfectly respected. We did not really break through this level. We immediately displaced back lower, and there could have been a turtle soup entry. I don't have that set up. Okay, never mind. This was a turtle soup entry, and then later on this was another good entry as another change in the state of delivery model was presented. And again, change in state of delivery, we could have entered out of here or here. Let's say we'd put it at 50%, and price would get immediately like to this loss. So yeah, that was my lesson today, to stick to a change in the state of delivery kind of entry or a fair value gap entry, and not hurry before that occurs, because it cost me not only $300, but it cost me actually, well, 300 plus the profit that I could have made from this, and that would be around, let's just say I would not even around a thousand, and that would get me a lot closer to passing this evaluation account. But I'm not gonna put too much pressure on myself, and negative thoughts on myself, just because of this mistake. This kind of stuff happens. So yeah, I hope you learned something, and I'll see you in the next video.